Good morning, Jags. This is Fahad. Today is Monday, January 11th. Let's get started. So I would like to circle back on a stock that a client named Jerry asked about in the chat room on Friday. And so we briefly provided the discussion at that time. And so today I have a bit more color. And the stock is Desktop Metal, symbol DM, Desktop Metal. Now, this stock is a very interesting technical look considering the other 3D printing stocks, including Stratasys, as well as 3D Systems, DDD, had a massive run last week, largely because of short covering, but also because both, particularly 3D Systems, posted a very strong quarter, sharply raised guidance. You can see that's DDD right here, sharply raised guidance, and this stock blasted higher by more than doubling, essentially in just a 2-day period. The similar kind of dynamics and the similar kind of sentiment actually also translates into Desktop Metals, symbol DM. Now, this company we discussed on Friday last week. This is a $4.7 billion company, which is rather a new player. It was started in 2015 by a bunch of MIT scientists that got together with venture capitalists and they formed this company. And only after 3 years and 3.5 years of development was really in early 2018 when they started to create various kind of products on the market. And those products finally started to get traction in the manufacturing channels really beginning from this year. So whatever the growth rate that is expected from here is yet to come into the picture. Also, this company does not have a lot of analyst coverage, and I believe that over time that analysts will warm up and we're going to see more initiation notes on this stock, and we're going to see more upside going forward from here. Here is what the machines look like. If you look closely, these are what these units look like. And this company called Studio System, it has two different kind of products. One is called the Studio System and one is called the Production System. For the Studio System, it started shipping in late 2018, and DM is offering the printer starting at a subscription price of approximately $3,500 per year. So it sells it as a subscription. And then for a production system, which is a proprietary binder jetting technology based on single pass jettings, or SPJ, it is capable of printing speeds that Desktop Metal, that the company says, that are up to 100 times faster than any competing laser powder bed fusion systems. And so this would make this particular technology, the production system, fastest in the industry, 100 times faster than the traditional methods that are out that are available. And the company already has started to do installation in select customers beginning from the fourth quarter of 2020. And they expect that volume shipments of this will begin in the second half of 2021. So we're talking later this year. The company has more than 90 reservations for this new production systems already in place, including from customers that the company says represent multi-unit potential over time, giving it partial visibility into potential shipments into the first half all the way to 2024. Again, the production and volume shipments of this particular unit will begin in the earnest in the second half of this year. Now, with that said, since this production, or since this company started to put out all of these productions and all of these machines into the production, we have seen tremendous amount of news flow beginning really from the beginning of November, in the past 2 months essentially. So for example, back right here on, this was in the first week of November, the company announced that they have received a multi-million-dollar award from the Department of Defense for the development of high-volume manufacturing process to mass produce cobalt-free hard metal products. And this is basically for a contract that was originally given to the U.S. Army. This is a 3-year contract for $2.45 million. It's only in the beginning stages of this particular machine that you can see right here. And over time, this is likely to turn into a much larger contract than what we have seen in the future. So it's a pilot program right now that the company received only in the month of November. So there's that. Then secondly, a couple weeks later, late in November, the company also launched its new product simulation software for metal additive manufacturing, which is what basically this looks like. And this particular software is going to provide new kind of tolerance or hardicity, or I should say the tolerance to the actual material that goes into the 3D process making so that it doesn't break. And you can produce elements that are much tougher in nature, that can be used into core manufacturing processes and machinery processes than what we have known from 3D systems and others in the past. So we have yet to see whether this thing is going to get significant kind of traction going forward, as well as manufacturing PMIs continues to rise. But this is also one of a kind of a additive manufacturing software that is going to allow the manufacturing companies to make much more harder product than they have been able to make in the past. And then lastly, then this news came out. This was in December, and this is when the company mentioned that they're going to begin global installations and shipments of shop system for mid-volume metal 3D printing manufacturing. So this happened in the middle of December. This was first unveiled in 2019 in a large conference in Frankfurt, Germany. And this machine is designed to bring metal additive manufacturing to machine and job shops with an affordable turnkey solution that achieves exceptional surface parts, finished parts, and rich features details at speed 10 times faster than legacy powder bed fusion additive manufacturing. So we have yet to see how much this thing is going to get the traction. So 3 major products, 1 software products and 2 hardware products, all were launched in the month of November and December. And yet, when I look at the consensus view, we have rarely any kind of coverage in this stock right now. There's not much movement. The industry is clearly showing significant traction, as we saw from blowout quarter from 3D Systems, DDD, and Stratasys News recently. And so this stock was starting to respond to that. And so I expect this company to actually be in the high momentum name going forward from here as manufacturing PMIs continues to rise throughout in 2021. One to watch. This also, surprisingly, for a small company that is and relatively new, to my surprise, this has significant amount of call option activity recently. It's a very, very option chain, very active option chain, I should say. It has strikes available that are very frequent, all the way up to 40 strike. And on Friday as well, we saw a pretty healthy amount of option activity with 41,000 contracts, call contracts that is, traded in the stock, or 7.6 times daily average call volume versus put volume was only 5,000. Net, there were a lot of calls that are being rolled out from January to out of month. And so overall, approximately $700,000 worth of call premium was accumulated in various strikes. Particularly in the month of February, you will see these open interest at the 20, 22.5, and 25 strike calls continues to rise. So I'm expecting that, given the market is going to be down today with NASDAQ and S&P and Russell 2000 all looking to open slightly down, this thing is going to possibly come in maybe just under $20 per share after this high volume breakout. Here you can see another technical picture here. You can see very high volume surge in the past 3 days. It's probably going to slightly pull back today with the market, but I think that's a setup to buy on that pullback for an eventual another leg higher that carries the stock all the way to new 52-week high. And this should all be on your watch list throughout in the year 2021, given all these major productions and announcement and launches that have happened in the past 2 months. That's it from me, Jay.
Good morning, everyone. Taking a look today at ResMed, ticker is RMD. This company develops medical devices and cloud-based software applications that diagnose, treat, and manage respiratory disorders comprising sleep apnea, pulmonary disease, neuromuscular disease. 51% of its revenue comes from devices. 37% of its revenue comes from masks. Now, last quarter, total revenue was up 10%, and revenues were favorably impacted by the continued demand for ventilator devices and accessories due to COVID-19. They also experienced strong mask revenue growth in both domestic and international markets, but they did see some continuing headwinds in the sleep device market. But over the next few quarters, management did say they expect, first off, they see ventilator sales returning to more normal levels while its sleep device business slowly recovers. And I think this is where the upside is going to be. Based on channel checks, I think management is taking a more cautious tone here. So if we look at JP Morgan, after earnings, they came out with a note, and within that note, they talked about the recovery in sleep and how it's expected to continue in 2021. They pointed to new patient volumes in Germany recovering to be 85 to 90% of pre-COVID patient flow. China improved to 70% from 50%. The US is still at around 70%. And the channel checks that they conducted during the quarter showed the trend in new patient setups was positive across the quarter, with the end of the quarter almost back to historical levels. So as they said, management commentary on this front was more cautious than what we have been hearing from their contacts. And now going to Needham, they were out with a note just this past Friday where they worked with HME News to survey 36 home medical equipment companies about oxygen and sleep products. And if we look at the last year, respondents said they saw sleep patient volume increase by just 0.8%, but they expect volume to increase by 7.6% over the next year, which is also an improvement from the 5% growth that was shown in Needham's last survey. So like I said, there's potential for upside here. And then finally, in that Needham note, they also talked about how ResMed is looking to gain mask market share over the next year. Respondents indicated that masks currently make up 48.7% of their purchases and expect this to increase to 50.2%. On the last earnings call, the company announced their latest innovation, which was called the AirTouch N20, and essentially it's the first nasal mask with a memory foam cushion. And now looking at the next two events for this company, they're going to be presenting tomorrow at the JP Morgan Healthcare Conference at 4:30 p.m. Eastern. And then on Thursday, January 28th, they will be reporting their Q2 earnings after the close.
Very interesting and a beautiful looking technical picture here for a breakout. Nice 2-month long consolidation. Nice candle on Friday and the day before. Volume is also starting to pick up behind this. MACD has reset, and so we're starting to see bull cross here. RSI has made a rounding bottom and is starting to climb higher as well. If the breakout happens through $220 resistance here, after this beautiful 2-month long consolidation, in the asymmetric world, we should see similar kind of a trend develop on strong volume like the way we saw over here back in November. At that point, the stock rose from 180 all the way to 210 before going into the consolidation. So about 15% run at that time. And we could see something similar that carries the stock all the way to 230 or 240 to $250 range. So this catalyst that's tomorrow is going to be an important one, and I think that could set the ground as to how the quarter is shaping up for Q4 as well as beyond. So that's what I would look for. Interesting update. Chronicle.
Morning. Have an update on Goodyear Tire today. KeyBanc was out with an upgrade to overweight on Friday with a $14 price target. There were a lot of things to unpack in the note because it was 33 pages long, but there were three things that stood out to me. First of all, their channel check showed that sellout demand for the month of December surged 19% year over year, and at the same time, their diffusion index shows what they deem to be a favorable gap between sell-in versus sell-out, which points to further shipment recoveries for 1H of this year. And then the second important nugget that their analyst James Piccirillo mentions is that very recently on December 30th, the US Department of Commerce confirmed the immediate enforcement of anti-dumping tariffs that will affect roughly 28% of the entire US consumer tire market. However, Piccirillo notes here that according to his research, Goodyear has virtually no exposure to these tariffs, which implies that the company is going to be in prime position to not only raise prices, but also gain market share at the same time, which is obviously going to be a potent combination. So that's point number 2. And then finally, the last thing which caught my attention, the note looks ahead to 2021 and it mentions inventories remain lean, as I said, due to sellout outpacing inventory in one of the charts that I shared. But also, more importantly, this should help keep pricing strength sustained while concurrently anticipated shipment recoveries in 2021 across all major global regions. That combination should result in an accelerated tire production led by commercial and light vehicles. Now, one thing I'm surprised this note didn't mention, but I think it's also important to the bull case, is that India recently passed a massive fiscal stimulus bill totaling $120 billion, with the bulk of that support going to manufacturing companies. And I mention this because India is one of the biggest revenue drivers for Goodyear in Asia Pacific. There has to be some benefit from that. So putting all this together, I think there's room for more upside here in the stock. I'm aware that the officials option trade alert that we put out a couple months ago didn't work out, but I think this is worth a second look. So I know markets are going to open down moderately, but I'm going to be watching this stock closely for any signs of relative strength as the week progresses, and I'll be entering the trade if I get that.
Yeah, very interesting update. And you know, when I originally put out that bullish article in the trade alert on on Goodyear, which did not work out, it really was only function of I was expecting that Buy America, Build America theme, as well as the rotation that we were seeing from growth to value will result in this stock rising much more rapidly, similar to how we have seen many other cyclical names take off. I mean, within the auto sector, we saw General Motors and Ford also perform rather remarkably, but this thing stalled right at $11 per share. So the call options that we were holding was at the December 11 strike, which was taking way too long. And naturally, as soon as the month of December was over, the expiration was behind us and the new year started, then all of a sudden last week on very high volume, this has started to break out. My target still remains $13 per share. So even from here, if you're a little bit wait to catch this momentum, but I still think that this thing is going to make its way to 13 minimum, which is more than 10% upside from here. And this update from KeyBanc that the December sellout tracker shows 19% year-over-year growth, which is a sharp rebound from November's decline of 3.5%. That's significant. That's a huge sequential improvement month over month, and that should be enough to continue to propel this stock higher. And it paints a very strong picture for the fourth quarter earnings report as well, which I believe is going to be reported on February 12th. Date is not confirmed yet, but on February 12th, before market opens, is when I'm showing when the earnings report will come out. So interesting update over here. Maybe good for another entry, and let's see how the market will react today. Today's modest pullback just may provide that opportunity to get long call options again. All right, great stuff here, guys. Thank you very much for joining. We'll see you in the chat room shortly.